Good afternoon, everybody. It's Max Convexity. How you guys doing today? Hope everyone's having a good day. All right, I was just looking at something that I thought was cool. It's a model, a timing model. Of course, I don't believe you can time the market, but this is one of the things I look at. And it's a rules-based model based on volatility. And I gave a VIX report the other day, what I call a VIX report or volatility report. And one of my commenters asked if I could do it every day and on the daily report. So I am. I'll do it every day. All right. So I look at it in two different time frames. I look at everything in two different time frames. There's the daily time frame, which is kind of longer term, and then there is the 30-minute time frame, which is kind of what we look at every day, which is more what I use to trade these shorter term options. All right, but you have to look at, ideally you want to look at both time frames together. So I went back here. This bottom line right here is a graph of the triple Qs. All right, that's a little bit more accessible than NASDAQ. NDX options are so big, I'm usually trading triple Qs or sometimes XND, which are the same size as triple Q. Okay, well, you can see I put here green whenever the system was indicating, good times ahead. So at this time, the Qs, and that started like last April. That was where I went, April of 2023. I just went back to there, and that signaled, that was at, the Qs were at around 320, and then by the time it gave a counter signal, the Qs were at like 352. Then the next signal was a bad signal. It signaled trouble ahead, and it wasn't right. Sometimes this, the volatility signals there's a problem and nothing happens. But in any event, then the next time the market did pull back a little bit. It's hard to tell here, but the market pulled back from 360 to 340. Anyway, but then after that, it signaled, green for go, and that was at 350, and the market went to 439 before it gave a warning signal. And that warning's okay. Now that was March of this year, and you remember April of this year was bad, so that was a good time to give a warning signal. I'm going to try to zoom in on the chart a little more. Actually, this is more like this. As the signal was actually right there. The pink area, red area is the maximum they could have got off the trade. Let's see, I should have zoomed in and done a little better job doing this. Hang on. But you can see here, generally, volatility can point you the right direction. All right, this time right here, the Qs were at 437. This was after April was over. This was like May 8th, green for go. And then we went from 430 on the Qs all the way to 500. And then it pulled back to like 478 before it gave a counter signal. But then that was right before this last little downdraft. Now, here's the catch. It's this system right here, which has been pretty damn accurate, as you guys can see. Okay. All right. Well, now it looks better. But, this last one, it signaled trouble ahead at 475 on the Qs. And that wasn't just right before the market went down. That was like the 18th, 19th of last month. And then sure enough, the volatility started going up. They, even before it started blowing up, it gave plenty of warning. And then anyway, sure enough, fell all the way to 435. The catch is that this, according to this system, this is still short. So this is saying this bounce is a dead cat bounce. And now who knows? We could also, tomorrow, it could switch to green and things could be all right again. But it's just something we'll watch. It's interesting to watch, I believe. Okay, so now let's look at Defiance real fast. All right, I'm going to get rid of this graph at the bottom. Darn it. I'm going to get rid of it. All right. Okay. you could see the NASDAQ, which will be triple QY, finished with a gigantic loss today. It's going to look like, or probably pretty good, probably more than $1 million. I don't know. Gigantic's not the right word. But anyway, let's look real fast and see. Triple QI, yeah, 1.4, 1.494. We'll call that 1.5. Now they're doing really well, other than 2 days ago when they lost 2 million. But other than that, they've been just killing it lately. So they're still up 51 cents a share even after today. Okay, and the dividend estimate's still $1.32 in old shares, $3.95 in new shares. All right, now let's look at JPY. These guys lost 147,000. They lost about half of what they were going for. So they had a better day in comparison, and they're still up 87 cents a share on the month, killing it. Dividend estimate is now dropped under $1 for the first time in a while. It's at 99 cents a share in old shares, 296 in new ones. All right, IWMY, these guys were going for 743 and actually made 348. So this deserves a look at the charts. Look at that. All right. Well, I mean, just like you would expect, they're about halfway through the profit box because they made about half the profit they were going for. Nice job, guys. Nice job. Well, I switched to this Windows machine, and I'm a Mac person or whatever, but the trackpad on this Windows machine just sucks. I mean, the main thing one of my favorite things about MacBooks is the trackpad is so much more accurate and works so much better. Sometimes this one works and sometimes it doesn't. All right, so let's look over here at USO. Now, oil had a big day today, I understand. Look at that. Oil had a gap up opening. Okay, well, these guys sold this 74 option. They sold it Thursday night. But they sold it to expire Wednesday. So we'll see. They could maybe even cover it. I wonder if they covered it today, like for 20 cents or something. They sold it for like $1.71, but wonder if they cover it for a dime or something. And then maybe try to double dip and sell and move up and sell it, roll it up and out and sell another option. We'll see. They may just let this expire worthless. We'll see what they do strategy wise. But this fund's doing well. And so speaking of doing well, let's look at the buffer report, the old buffer report. Where's the old buffer report? Chart 23, no. Chart 11, yes, chart 11 is the old buffer report. All right, well, I noticed down here on the left, USOY, which is the high yield funds, only up half a basis point. Okay, well, we have a spreadsheet on USOY, and that's probably makes sense with about what you would expect. Yeah, because they made $1.71 times 1,600. They made I'm trying to think here. That was all extrinsic. Well, anyway, I need to work on my intrinsic and extrinsic. I think that when they sold that option, it was all out of the money. That ought to be all in the extrinsic camp. But in any event, if you add up $1.71 times 1,600, which is, what is that, 270,000 it looks like? Oh, there it is, 273 as a percent of their, it's about 1.8%. So it's a lot. It's about a 1.8% for the whole contract's worth 1.8%. Now it doesn't expire for a few days, 2 days. So they're giving themselves credit for about a third of that. The market says the market's giving them credit for being up about half a point. Really, if that contract expires out of the money, they're going to make more like 1.5 points. Okay. It's just interesting to see how these daily funds trade. So there's USO. Watch, we can even do this. We'll add USOY. We'll add it we'll just add it on the same. since these aren't daily options, it's not going to, if this was XDTE, because they sell options once a day in the morning and stuff, XDTE would be banking on action like this with this huge gap up. Anyway, the general direction of the yield fund is going up for sure, but they aren't going to get full credit for this gap because remember that option, even though it's worth 1.5 points, it doesn't expire till Wednesday. So you divide 3 by 1.5 points, you come out to about 0.5 point, which is what the market gives them credit for, which is kind of what we're talking about on the buffer report. We're kind of seeing, hey, is the market giving this fund too much credit or too little credit? Well, in this case, I would say it's about right. All right, let's see what else we have. Let's see what else is going on. YBTC is up. I really don't look at those that much. Let's just look at these indexes. It looks like the S&P was down 32 bips. What did SPY-T do? Was it unchanged? All right, well, JEPY had a little bit of buffer. JEPI had a good day. SVOL had a good day, beat the index. ZIVB, good day, beat the index. Great job, guys. All right, let's see who was kind of a standout on the bad side would be AIPI and KQQQ and iSpy, but that's as long as iSpy didn't pay a dividend. I think they had a dividend. I bet they went X because that's a really good fund. I'll check on that, and that'll be fixed by tomorrow. I think I did see that they paid a dividend. So, because I wouldn't expect them to be down that much. All right. Let's see what else we can look at. Let's look at Tesla and crash. This trade's starting to be kind of steady. We're still down 8%. This trade's yielded 20% if you bought the pair, Tesla, and you bought crash at the same time. The NAV return, well, it's giving you 20% yield, okay, dividend in other words, or distribution, whatever you want to call it. However, the total investment is down 8%, 8.28, and that's even including your 20%. So what that tells you is that means the NAV must have pulled back 12% because NAV return plus dividend return equals total return, right? And yeah, so their total return is -8, but they've paid 20. So the only reason for that, the only way for that to happen, the difference has to be. So my formula is this: TR equals NAV return plus dividend return, or some people call that yield or something. All right. So we know the total return is -8. All right. So -8 equals whatever the NAV return. We don't know what that is, but we know the dividend return is 20. All right. See how you figured that out? Yeah, it's not that hard, is it? I'll just make sure I did it right. Okay, so we can see that on the graph too. We can see that that's right. So of course the answer is -28. And that's the blue line. The blue line is just the NAV return by itself because these funds both pay a dividend every month and they take the dividend out of the NAV, but then that goes into your bank account. Well, the blue line is just the NAV without the dividend factored in. The red line is if you factor in the dividend. So the red line's more realistic, but also the distance between the blue line and the red line, right, is this number right here, is also the yield on, is also what they've yielded, because that's the only difference. The red line has a yield associated with it. The blue line is no yield associated. All right. So now let's look at this. I wanted to let's go a little bit further in depth for those of you that are still here. And we're going to do a shorter term volatility report. So let's take that out of there. So by shorter term, we're going to drill down to the 30-minute time frame, but we're going to overlay we're going to overlay a chart of, we'll do the SPY. A lot of people like to trade the SPY. It's real accessible. We'll do this. No, we'll do a new price scale. Okay. All right. So you can see here in the 30-minute time frame, right here, this blue line is where the daily time frame first signaled trouble. All right. Now we could go back and this shorter time frame, if I drill down, it's going to signal, it's faster. It would be sooner. I just don't want to zoom in that much. But it'll also signal when to go long sooner. It's faster on both ends. So what I do is what you can do is you can use the direction of the longer time frame. And so you can say, okay, the longer time frame is saying long volatility, which means short the market. And you can just pick opportunities to short the market in here based on something that's happening in the shorter time frame. But in any event, I think it's interesting to look at. Let's do that. I want to do this. Let's put this on its own scale. It'd probably be a little easier if it was, we would do existing new pane below. All right. Still want to see if it, goes up or down. So I don't have the formula set to update automatically on the 30 minutes. The same system I was using in the other one I can do here, but I'll just do it by hand. But for instance, where it comes in handy is okay. Right there in this time, the 30-minute time frame, it signaled clear sailing ahead. So, and it's been that way ever since until a few days ago. And it started in the 30-minute time frame. Even Eve started to say, yeah, no, maybe we are going to sell off again. The 30-minute time frame gave a warning somewhere. Hang on, let me zoom in a little bit. Anyway, so that's what we're mainly going to check is the 30-minute time frame. But it's important to know that where we are in the context of the longer time frame. Man, this trackpad is just, why won't it work? I'm just trying to, it just won't work. Okay. That said sell right there. It's switching back and forth. It's indecisive. In any event, it's on buy right now. The model's on buy. So that's the thing. So it's probably a good time to stay out of the market because the 30-minute, the shorter term model is bullish, but the longer term model is bearish. I mean, the longer term model is bullish on VIX, which is bearish on the market. The shorter term model is bearish on VIX, which would be bullish for the market. So anyway, the models disagree. But from now on, that's what I'm going to talk about. I'm going to talk about where the longer term one is and where the shorter term one is. Longer term is still saying trouble ahead. Shorter term is saying clear sailing ahead on the volatility indicators or Max's volatility indicators. All right. So I think we've just about covered it all on this one. I appreciate you guys for being here. I haven't updated this report yet today. I'll update it. It'll be accurate as of tomorrow. I'm guessing XDTE just keeps going ahead. I mean, hell, it's had a great month. Was there another gap open this morning in the SPX? That's how you know if XDT is going to do well, or QDT for that day, and how well it's going to do. Is there a gap open? And today there was a small gap, but it's just not enough. But you're looking for these days like this, these days like Thursday to Friday where there's a giant gap, or the Wednesday before last till Thursday where there's a 2-point gap. That really helps those round hill funds out, just the way they're structured with their strategy. Anyway, so we'll also keep an eye on that, and I'll update I'll update this graph so we can keep seeing how Round Hill's doing compared to iSpy and compared to JEPY. And we'll also keep an eye on THTA, ZIVB. These are kind of the ones that need daily attention. So they're gonna have their own buffer report, and by that I mean I'm not saying that bad, but these are the ones that are more rewarding for sure, but they're going to have a little more risk in some cases compared to some of the other funds. All right, guys. Well, I appreciate you for being here. I hope you like the volatility report. I'll make it shorter tomorrow. I was trying to work out the format. And I'll get some color coding on the charts where we can just look at the chart and see. I'll work on that. All right, guys. I appreciate you. Have a good day.